Good evening, everyone, and welcome to Crypto Pulse Weekly. I'm starting just a bit earlier than usual today because I think I might have a lot to cover, and because today's episode is going to be the last episode for a while because I'm taking a break. I'm taking a sort of a summer break. I'll probably just determine when I'll be back based on feedback from the community. So throughout the month of July, definitely we will not be having Crypto Pulse Weekly. Um, when we will have it in August would be determined by the community. But definitely today's episode is the last for the next at least 4 weeks. I'm taking a break, as I said, and we'll definitely probably not resume until Q3, definitely Q3, August or September. So having said that, let us go ahead and dissect the news and what we have today. As we all know, yeah, the bear market is upon us. Unfortunately, there are too many bad news and bad fundamentals across board that are spilling into the markets. And whether you like it or not, every sphere of the market is going to have a fair share. So risk on assets are the first to get hit. Crypto is classified as risk on. Same thing with stocks. Equities will get hit after a while. Eventually, we'll get to real estate. And the reason being that there's just too much money in circulation. And the efforts of the government to curb that is going to hurt a lot of people. And we need to be prepared. You know, if you're there's a Yoruba proverb that says a foretold war does not kill a crippled or a wise crippled or a wise handicapped person, because what it means is the person has foreknowledge of what's going to happen and the person will make adequate preparations and adjustments. So whether we like it or not, inflation is going to be here for a while. We are going to most likely end up in a recession because the efforts that the Fed, the Federal Reserve Banks of the US, and their counterparts across the globe are taking, those efforts are going to result in a lot of harm in people's pockets. Having said that, let's get into market updates, and I'll talk more about what is coming. So yeah, the 75 basis points is now in full effect. The promise by the Fed is to adjust the rate hike every 6 weeks. If they follow through on that intention to adjust the rate hike every 6 weeks, it means that in 6 weeks' time, they're going to hike the rates by 100 basis points, which is 1%. It's just 75 now, and the market is the way it is. By the time it gets to that point, definitely we will be in a recession. Bearing in mind, as I always say, that our data for Q2 we only get exposed when we get to Q3. So when the Q2 data comes out, it will show in many parts that many countries have already started suffering the effects of recession. And I need to make a detour because of maybe some new people and also because of people who might have been in the community for a while and are wondering, what next? I didn't I didn't make it from my crypto investment, or I didn't become a millionaire through my crypto investments. I usually try to tell people that understand that this is just beyond wanting to make money or wanting to capitalize on a new technology. This is a transformation of generational proportion. And I say this when we have face-to-face meetings, that the reason I go into details to explain it each time is because the human brain sometimes does not pick up stuff on the first or second instance. What is happening right now is as important as what happened during the era where printing press technology came to be. it is that life changing. And the reason we don't realize it is that life changing is because we are living it right now. We are living that history. We are within that history. So it's usually very difficult to be able to place yourself in history when you are within the context of it. So understand that this is just beyond, we want to sell, want to buy low and sell high. This is transformational, transformational stuff. And the effect of this is probably going to be here till the end of the world. Just like the effect of the printing press never left the world. It was because of the printing press that we graduated from printing with typewriters and printing press to typewriters to computers to internet. So the effect of what is happening now, the decentralization of money, is going to be with us for the rest of the civilization of mankind, or till Jesus comes, depending on your leaning. So understand that everything that is happening now is just a precursor to some more difficult times coming ahead. Why do I say that? We already have inflation at 40. Inflation is 40-year high. Rate hike is not, they've not done rate hike as high as this in 20 years in some instances for some countries. So understand that this is really, really, really stringent times, and there is the need to position accordingly. What do I mean by that? One, there's a saying that you should buy the blood, or you should buy when there is blood on the streets, even if the blood is your own. It's a saying by a famous capitalist, and the reason I resonate a lot with that saying is because it's very counterintuitive and contrary to human nature to want to go towards something that's hurting you or something that looks like obvious hurt, because our nervous system is designed to protect us, quote unquote, especially our autonomous and peripheral nervous system is designed to protect us. So if you see danger, the first thing it wants to do is to protect you from danger. So if you see blood on the street, the first thing you want to do is to take cover. Just like if you hear gunshots anywhere in the world, the first thing you want to do is to take cover before determining the next line of action. So in the same way, when the markets are crashing, the natural reaction is everybody wants to close their position and leave the market. But when it comes to the markets, these are the gold mine opportunities that presents life-changing and life-transforming avenues to plug in and get things at discounts that you probably never have gotten them. Why am I going through this all this litany? I understand that a lot of people have invested in crypto and they look at their portfolio, it's probably like down 90%, and they're wondering, what's all this nonsense? Understand that you probably bought in before the peak of the market or the middle of the market. And what that means is that since the market started coming down, the market has lost value. But like I said last time, and I said it 2 weeks ago as well, if you bought Bitcoin, your Bitcoin has not lost value. It has just lost its dollar exchange value. You say, what's that tautology? It's not tautology. One Bitcoin is one Bitcoin. One Satoshi is one Satoshi. It does not change. The only thing that has changed is how much you can exchange it for. In 2011 or 2010, you could probably exchange one Bitcoin for maybe $1 or $10. As of today, it still goes for $20,000. In 600 days' time, it will be going for above $60,000, probably on its way to 100,000. Understand that the value of the underlying assets does not change. What changes is the market capitalization based on fiat currency, which is the US dollar. In London, or Lower Manhattan, or in Monaco, that prime real estate will not be sold if you need money. The reason you will not sell it is because it's real estate. So you will not sell, even if it's not prime. If you have real estate in somewhere like, even in Nigeria, if you have real estate in Nigeria, you probably not want to sell your house, except you're vacating the country completely. But if you need money for short-term stuff, you probably want to, get a facility, even if it's against the house, to utilize the money in the short term and find a way to pay back. So understand that if you hold Bitcoin, you hold digital real estate, and everything is going to crash right now, including real estate. The inflation is not going to stop. The prices of stuff are going to still go up because Russia is going to find a way to make the rest of the world pay for its sufferings by continuing the war, unless maybe, of course, they find a way to terminate Mr. Putin, which is another ramification. But the suffering is going to be felt by everyone because Russia and Ukraine are the two largest producers of grain across the globe outside the US. So understand that this is going to drag out for a while. But that's not the crux of the discussion. So the crux of the discussion today is, if you can still feed and you can eat, which many of you fall into the category of you still have your day job, this is the time to start accumulating these assets. And this is not just true for crypto alone. This is also true for stocks. And the reason is there are too many indicators. I can go through S&P 500, I can go to GXY to show you that everything is showing that we are at bottom levels. S&P 500 is showing that we are at bottom levels like we were after the crash in 2008. Bitcoin is showing that we are even lower than the levels we were during the COVID crash. So whether it goes down to 14K or it goes down to 12K, it's quite irrelevant at this point. What we need to bear in mind is that this is discount pricing across board, and there's a reason for the discount pricing. When, like I said, natural human nature wants to protect you. So when there's a perception of danger, everybody runs for cover. The way that pans out on the market is, if there's a perception of danger, everybody wants to close their position and take out their money because, like the saying goes, a bird in hand is better than a dozen in the bush. So everybody wants to take out their whatever they're looking for, safer havens for their capital or their wealth. And as a result of that, that redistribution causes the market turmoil that we have. So understand that if you're able to endure the next 600 days and you actually stack up in terms of crypto, you will be a very rich person in 3 years' time. Some people will become financially independent. I'm just saying, I'm going to do a case study when I'm back from this summer break. I'm going to do a case study, and I'm going to just recruit maybe like a dozen people. Of course, people will have to sign up. I'll tell them this is what you need to invest in, and we'll have a look at it over the next 3 years. Because I'm sure, if over the next 2 years, I'm sure that many people will do 100 to 500x of their investments in the next 2 to 3 years. So having said that, the volatility is expected to continue. The price has been ponging off 20K ever since we dipped to 17K. It's not been able to go back to 22. There was a lot of action today to try to push the price up, but until the options expiries expired, the price couldn't get back to 22. So the bears have won. Every likelihood that we're going to see further downside either this weekend or early next week. I think we're going to have a rebound in July, but there's a general pattern in the behavior of the price of Bitcoin. And that's that Bitcoin very rarely does what you call a V-shaped recovery. I'll talk about the recovery pattern when we look at the technicals. Usually it's a W shape or a rounded bottom that you have for Bitcoin. I'll talk about that as well. So because what we've had now seems to be like a V-shaped ping pong recovery, I'm not too convinced that we're out of the blues yet. So I would think that we will definitely see another bottom. In terms of sentiment, of course, there's a lot of fear of recession in the market, and as a result of that, everybody's selling off. Many miners, many small scale miners have started to turn off their mining rigs because it's no longer profitable for them to to continue to continue to produce Bitcoin. So they're rather just shutting off and waiting for when. So that's that as part of as per sentiment. In terms of regulation, yes, the rate hike is ongoing. Secondly, I saw news about the Spanish authorities trying to get people to declare their to declare their crypto assets. I think what's going to happen eventually is that we're going to have crypto havens, meaning countries that will not disturb people who are crypto wealthy. And people are just generally going to flock to those countries because they're tired of their host countries. Sorry, I had to switch off my fan because I think it's making a lot of noise. It's fairly hot here in London today, and I closed my window because I didn't want the noise from outside. Anyways, let's go on. So because of that, I think we will see some pain before we'll start to see some relief on the markets. What I think is, and I think I said this last week or week before, my hypothesis is that when the Fed see the figures coming out from Q2, they would have a revision or say, okay, we're going to watch and see what happens before doing any quantitative easing. But I understand that, well, the deed has been done during COVID. You say, Dr. Damien, what do you mean the deed has been done? They already made everybody poor during COVID by the stupendous amount of money that was printed into circulation. Of course, we didn't see that money with our physical eyes because it's mostly digital. But a lot of money was pushed into circulation, as I've always said. As a result of that, it has diluted the value of the US dollar and by extension, the value of the world economy. And it's going to take a while for that dilution to redistribute completely. Now, in the process of redistributing, things are going to be very expensive. I saw a graphic that was trying to compare the price of, I think it was butter, milk, a number of things, petrol, gas, over from 2020 was like an animated graphic, and it showed how petrol went from negative at the beginning of COVID to, going all the way up right now. I mean, everything is expensive. That is goes without saying, and it's going to probably be expensive next year to the end of the year. And next year if this war continues, then next year will be worse in terms of general output, because what it then means is that the supply chain crisis will be fully, full blown. It's almost like it will have gotten to an inelastic limit at that point in time, because many people have used up their reserves. Many people have used up their, backfields, as it were. So tough times ahead. But yeah, like Robert Schuller said, tough times never last. Tough people do. So be well positioned to take advantage of the opportunities that show themselves in the bloody market, because that is when most people are not interested in taking opportunities in the market. But that's usually the sweetest time to engage the market, to be honest, because that's when everything is at a discount. And that's when the opportunities are the best. Having said that, let's go on to other news. Like you probably know, these guys went down. They went down last week. And many other people went down that were not as big as them, but they're probably the biggest of the crypto companies that went down. So 3Arrow Capital is a crypto fund. And at the peak, they had about, 16 or 40 billion assets under management. And they were doing well. However, like individual human beings, we are more off guard, or we are more careless when things are going well as opposed to when things are not going well. So these guys when the market was going good, they leveraged on their assets. Let me explain in simple terms. Let's say they had 100 million Ethereum, then they go and borrow 50 million and put down their 100 million Ethereum as collateral and say, give me 100 million Ethereum, or give me 50 million Ethereum, I'll give you 100 million Ethereum as collateral. Now use that 100 million Ethereum or the 50 million I borrowed, now use it to go and trade or stake in some of these DeFi protocols. Of course, the failure of Luna/UST has ricocheted into the other DeFi protocols, and many of them are beginning to fail because many people are making a run on their funds. Two things have been achieved by that: they're depleting the funds of liquidity, and the market cap of the market, the DeFi market itself, is getting affected. What this means for companies that are so leveraged, like I just described, is that they either need to pay back that loan or they need to close out their positions at a loss. So, or they'll get liquidated, meaning they'll get taken out of the market at a loss. For this company, they were very huge on Ethereum. Their liquidation point was 1,040 I think 1,040 or 1,014 Ethereum price. The market went for it and then reversed. So when Bitcoin price dropped below 20, of course, the market went below 1,000 and took them out. And then the company. So a number of, many of them are not getting open, but you also heard about Celsius. The difference is that Celsius destroyed, so that people are not going to make a run on them, because that would have wanted support their own. They will not have been able to support their own margin call. So for Celsius, I think they were at 17K. So if Bitcoin had gone below 17K, Celsius will have been liquidated. But then they added to I think they were originally at 18 or maybe 20. They added to the position, then they went to 17, and they added to the position again. I think it's right now sitting around 14K or 13K liquidated. I'm sure it sounds like Greek to most of you, but what they've done is they borrowed money to take positions in the market. When you borrow money to take position like that in the market, you have a margin that amount of money increases at price goes position. So now that the price of crypto and Bitcoin is falling crazy, or has been falling crazy, their liquidation point was getting closer, and everybody was already thinking of going to liquidate. But I think it was a smart move for them to stop withdrawals, because they will have been completely the water if people are allowed. They had like 1 million plus users, so opened up withdrawals. I know that there's a court injunction to drag them right now. Basically, people have been saying, just like 3 arrows, Celsius will have been dead as well, because they were in similar positions with these guys. So I didn't know, personally, I didn't know that we had this level of exposure at a corporate level in crypto. I thought most of the corporate players were just, buying and hodling like MicroStrategy, but apparently not. Most of the hedge funds, most of the crypto companies, most of the crypto venture capital funds were leveraged, highly leveraged in their position, meaning they were using money they didn't have to take positions on the market. And now that the market has gone against them, many people have to close out their position at a loss. So that's one of the contributory factors to what we've seen in terms of the price of Bitcoin. I was going to say here that Bitcoin is currently undervalued because, one, miners have capitulated. So any miner that is selling Bitcoin right now is selling below production price, meaning they're selling Bitcoin at a loss. It does not make sense for a miner, especially if they're in a country where electricity cost is high. it does not make sense for a miner to be selling right now. Except, of course, maybe they have renewable energy like hydro, but even at that, it is still not profitable for miners to sell. There are a number of on-chain data that suggests that capitulation is already in place, apart from the miners' positions, and many of the on-chain data about long-term addresses have shown that most long-term addresses are no longer profitable. There's an indicator on S&P as well that usually flashes when you're at the bottom. That indicator is below bottom right now. I don't have it on hand, but I saw it during the week. Another index that the market is in capitulation is this news from Binance that they said they have over 5,200 proposals from companies. Mostly, of course, acquisition proposals like come and buy us, we're in trouble and all that. But I wanted to point out at the end of today, one of them is utility. If anybody's going to build anything in crypto, and I'm learning a lot from it personally, that make sure that it's something that has utility. Because if it truly has utility, it doesn't matter what the state of the market is. The utility will drive the continuous adoption and usage of that. And Binance and FTX are classic examples of that happening right now. So I've talked about miners capitulation, about them dumping their machines, because I mean, and understandably, they need to dump their machines, because if they don't shut them down, what it means at a loss, and you don't know how long this is going to be for. So they don't know how long they will be in debt for, quote and unquote. Just give me a second. My internet changed to another internet on its own. So I usually try to use my dongle or my Wi-Fi as opposed to the home internet, because everybody else is using that one and it can kick you out at any time. So if the internet's been unstable, it's probably because of that. So yeah, miners have taken the bailout from the market. So we're only left with big miners now, still operating. I talked about Solana, I think a week or two ago. I will start buying Solana when it dips to maybe like 25. It's on the next leg down that Bitcoin has. I think Solana is a good buy. The reason is that they're developing a Web3 phone. I don't know what the details are, but usually when you have stuff like that, it's usually a good pump. It's usually a good pump mechanism for the token. So I think that's going to keep them pumping throughout the bear market. So it might be a good one to accumulate. Like I said last year, Solana raised the most amount of venture capital funds in crypto. So it's going to be very difficult for them to go down. They might not have strong utility, but believe me when I say that they have the money and the runway to weather the storm. So like I said, I'll start buying Solana once Bitcoin bottoms out. I don't think Bitcoin has bottomed out yet. I think we have one more leg down. It might be deeper than the previous leg down, or might be shallower, but definitely it's a good time to buy once Bitcoin starts to recover. FTX, I was talking about exchange tokens before. FTX are in talks to acquire BlockFi. If you know BlockFi is an infrastructure company, and they also have this media outlet as well. Like I said, many crypto companies are undergoing a lot of stress because of, obviously, the market is drained of funds. And once the market is drained of funds, and you have the economic condition that we have now, naturally, things are going to be very tight. So that's exactly what's happening. So, but the guys that are extremely liquid and buoyant are the exchanges. It's something that I'm going to think about, because that's what it means, that the guys that are able to weather the bear market at the exchanges, they're extremely liquid. In another news, Cristiano Ronaldo, we all know who he is, partners with Binance, and they have a number of things in the offering, but yeah, I think it's also going to be a good pump for Binance as well, because everybody knows Ronaldo is probably going to be selling his NFT on Binance. So I think that'll be fun to watch. In terms of, yeah, the health of the market, is quite, it's a bit better than last week. Last week was extreme fear at 9. I did say that when it's below 10, it's a good time to buy, but I expect it to go below 10 once more. Once it goes below 10 once more, then definitely it's a confirmation for buy. Extreme fears across board, whether it's 4, 14, 9, 10, or 20, is always a good buy opportunity. I was thinking about this when I was preparing this slide. I was thinking, if I followed my own advice on fear and greed index, I probably made more money than now, because fear and greed index is one of the most accurate sentiment indicator in the markets. It's like bang on the money. If all you do anytime is just wait for it to turn red, buy, wait for it to turn green, sell, guaranteed profits. As in, without, in fact, you don't need to just check and just buy and sell based on that. Guaranteed. It's never failed. It's interesting, but it's never failed. It's the dashboard is an AI-based integrated report that fetches data across all sorts of platforms, Google searches and everything, and uses AI to interpret data on where the sentiment is at. And yeah, obviously, artificial intelligence is truly smarter, than humans. In terms of where we are, the market psychology, definitely now we are sitting at the bottom here in capitulation. Definitely that's where we are. What does that mean? What it means is we're likely to recover, but we're likely to be sideways for a while. Two ways this might play out. We might have a relief rally from July to September, then dump back again to the beginning of next year, then go sideways, then a relief rally sometimes in 2023, then dump back again. But definitely either at the end of 2023 or beginning of 2024, the market will start to recover. Why do I say this? Everybody now knows about the 4-year cycle. Almost everybody. Everybody knows that 2024 is the next halving. So everybody will want to take advantage of positioning for that halving. So once the overall economic fundamentals start to recover in any form, understand that the price of crypto will start to go astronomical. And I mean it. This year is probably just a freak example of what is going on. Because what's going to happen is inflation is going to keep going, then recession is going to hit. When recession hits, the Federal Reserve Bank and central bankers will understand that they've caused the problem by the quantitative tightening that they're doing. So they have two options. Stop the quantitative tightening and start pumping back money, which will worsen the inflation, but at least it won't cause a recession. Or they might call for a reset. And if you follow World Economic Forum, they've been talking about this global reset for a long time. So if they scatter everything and all the economies are messed up, they might say, okay, we want to reset because we are moving to central bank digital currencies. Like I said last year, the G7, the Asian tigers, the Western civilizations, all have now tried out central bank digital currencies. As a matter of fact, China has launched, but China's difficulty is that people are not adopting this as quickly as they want, and people are still holding on to other crypto. So they've come out to say Bitcoin is going to zero. They've come out with all sorts of propaganda in China just to dissuade people from accumulating, but people have been very recalcitrant. So people in China have been holding on to gold, physical gold, and Bitcoin, even though it's banned. I mean, it's officially banned, but people are still finding ways to hold on to it. So they are already, on the CBDC. The central banks are watching them closely. The G7 guys are already planning to implement it either next year or 2024, I think there's a very high chance that one of the major Western civilizations or Western countries will implement a CBDC next year. A CBDC gives them an opportunity to recalibrate because they can now say that your old dollar is 100 to the new one, like you do token swaps in crypto. So there's a very high possibility that that happens. Again, the end result of that is people are going to get poorer. I think the middle class is being eliminated systematically from a finance point of view. What we will then have is the poor and the wealthy. You will have to make up your mind where you want to belong. I know where I want to belong, but that's a sad reality, unfortunately, and people need to be prepared. People need to be prepared and understand that this is an assault, an all-out annihilation of the middle class. I mean, there is strike in Nigeria. As it was, lecturers are striking. There is strike here in London. In London, train workers are striking. They want more pay. And I'm laughing to myself, and I'm like, these guys, they don't know what's going on, because your problem is not more pay. More pay is not going to solve the problem right now because everything is going on. Yeah, maybe in the short term, but it's not going. It's the effect of what the government had done during COVID is going to live with us for the next 1 decade at the minimum. And you know, because you can't outproduce free money, I don't know how to break that down. I think that's going to take me another session altogether. Usually when you produce money or when you print money, you want to print money for a factor of production. You know, going back to basic economics, land, labor, capital. You want to print money for a fundamental factor of production so that that factor of production will produce and then will generate value for that economy. What happened during COVID was money was printed to no specific factor of production. Money was just printed to people's pockets. The side effects are the things that we're living with now, I'll continue to live with for a while. So how do we shield ourselves from this? I tell people, any money you have, no be only enjoyment. Try as much as possible to start stacking up, even if it's just Bitcoin. Even if it's just $1, you can buy in a week. And the reason I'm saying that is because at the end of the day, this cycle will pass. In fact, history suggests that this cycle usually lasts anywhere between 12 to 18 months. So in the next 18 months, we'll be over this cycle. There will be some form of economic abracadabra that will have happened that will take us out of this moment. But understand that these cycles do happen. And these are the time that wealth is actually being created. Let's go to technicals. I don't want to go into too much of other stuff today. In terms of the technical analysis, the price of Bitcoin has been struggling. Let me pick this one. Yeah, the price has been struggling to get out of the 21K range. What this suggests, just looking at this chart, is that we are still having a lower low. The volume is fairly constant and the price is trying to go up. It means that either we're going to have a plateau, just like we're seeing now, or we're going to have a trend reversal. My money is on the trend reversal. I think that because we've not been able to break through beyond 22, if I didn't even touch 22K, no, we didn't touch 22K. Because we've not been able to break through back to 22K, and the price is now flatlining, we're probably going to have another dump. The best chance for a dump is usually Saturday morning at 3 a.m. or 2 a.m. when Asia opens on Saturday. And I don't know why, but a number of hypotheses. There are whales operating in Asia at that time. They're awake at that time, and the liquidity on the market is really very small. So any big player that is looking to hunt for liquidity, it's easy for them to just short the market and collect all the pending orders that people have on the other book before they wake up. So I think this is looking to me like a double top formation on the 4-hour level. On the daily, it's not looking fantastic on the daily. On the daily, it just look like if it's slightly recovered from that jump all the way down to 17 or 17, 17.8 something, 17.7 something. Just a quick lesson on Bollinger Band. Bollinger Bands, I usually tell you, Bollinger Bands help you to know the limits of the market price. Most price will bounce off Bollinger Bands 80 to 90% of the time. And that's why you see this reaction that the price went back up after touching and breaking through this band. Now the band has extended below the market price, giving us allowance all the way to 15K. What it means is that if a market maker wants to be wicked, they can wake up tomorrow morning and short the market all the way down to 16K. I'm just saying, just explaining, some of the things that you see on the chart. So this gives the market maker an opportunity to short it all the way down to 15 to 16K. Because as long as this gap is opening and we're not getting significant rally, there's no significant buy pressure. So there's a very huge possibility. I'm always checking where the Bollinger Band is on the daily and on the, in fact, not only on the daily, I think I also check on the 3-day charts. Let me just change this profile, that's why it's not showing. I also check where it is on the 3-day chart as well. On the 3-day chart is at 18. I also check that just to confirm my bias, because it usually doesn't break down beyond that. You can see that once it pierced it twice, it just went back up. Same thing here. The second day after piercing the Bollinger Band, it went back up. Here it was just touch and go. So this reaction generally is not fantastic in terms of a recovery for Bitcoin. And I mean, for obvious reason, there's no joy in the markets, quote and unquote. There's no reason for cheer, as it were. So the market is not excited to buy anything. And the reason market is not excited, like I usually say, two things: S&P 500 and the DXY. I always say S&P 500 and DXY are inversely proportional to each other. If DXY is going up, S&P 500 is going down. If DXY is going down like it is right now, S&P 500 is recovering like it is right now. This formation for DXY shows that there's still much gas in the tank to go up, because again, this is the daily chart. You see that it still has room to go to 105, even though it looks like it's coming down off a recent high, just like it came down off a recent high and then shot up again. So it's possible that the next levels in the next 3 to 4 days, when the market opens next week, that the price continues upward trajectory. Very likely, actually. Hold on a second. No, so I think I had a chart somewhere like here before. Yeah, I think it's extremely likely that the price is going to keep going up, probably to the 107, in which case it will dampen the price of Bitcoin significantly. Yeah, definitely. So there's a lot of room for the price to go on DXY, meaning that S&P 500 is going to suffer. S&P 500 is the stock index for US stocks. So this is just a recovery of the crazy dump that happened last week. That dump was just mad. It was just gapping below gapping below every day. So this looks bad, because from a technical standpoint, it looks like what you call a bearish test, meaning the price broke through and is now attempting to retest the previous line that was lost. If it doesn't succeed, if this thing doesn't go up in the next 1 day, then automatically it's further capitulation for the price of Bitcoin. But again, for Bitcoin, I think the boundaries are pretty straightforward. Like I said, No. I think it was the weekly. It was the weekly chart that I was discussing. Yeah. So, like I said about a week or 2 weeks ago, that the way it looks to me on the weekly chart is that 10,600 is still very much in play. But before you crucify me, we might not get to 10,600 for about two reasons, and I'll explain my thoughts why we might not get to 10,200. You see, this, hold on a second, let me get an horizontal line. See this level, where is it? Where is that level? Yeah, this level, somewhere around here. Yeah, this level was where the price rebounded to after the first time that we crossed 20K in this bull run that just passed. So, and you can see that that's exactly where the price also went to touch, to check out, essentially. The price went to check out that level. If we have a retest of that level, it will probably be enough for a recovery to begin. And because we didn't have a full retracement based on Fibonacci levels for the weekly chart of Bitcoin, I don't think we're going to see 10K. I think worst case scenario, we'll see a dip towards 16K and back. But most likely, I'm looking at, another 17K dip before the price starts to break to the side from its technical standpoint. For Ethereum, I think I was telling, I can't remember what I was saying this to that. I think Ethereum is going to touch $493. I don't know when, but definitely I'm going to have my pending order sitting at $500 or $495 for Ethereum. But because definitely I'm convinced Ethereum is going to get there from a technical standpoint. But this is the weekly charts, meaning the older the time frame, the stronger the technical bearings of the price analysis. So from a technical standpoint, definitely we're going to see a $500 Ethereum. Same thing with BNB. I had a BNB chart somewhere, but I closed it. For Solana is a bit of a different category because they're trying to create a lot of buzz. So if you look at the price of Solana originally, it came from the zeros, 0 point something. So if Solana continues to go down, the lowest bottom I see it going is probably like $20 because that was where it was after it broke with Bitcoin, when Bitcoin was going to all-time high. But as I said, Solana is making a lot of noise. They have a lot of money for marketing because of the venture capitalists runway funds. So I see them weathering the storm. Let me see what this looks like. I see them weathering the storm fairly well. Yeah, they're probably going to be fine. Yeah, they're going to be fine. Yeah, I think we're going to, yeah, I think 2025 will be the bottom for Solana. And probably just go sideways from there. In terms of Bitcoin dominance, where is that dominance chart? So Bitcoin dominance has fallen rapidly in the last 2 weeks, partly because a lot of people started buying up alts when Bitcoin dropped below 20K. There was a news I didn't carry about two different, in fact, the biggest Ethereum whale bought about $24 million worth of FTX token. So whales have been accumulating some major alts like crazy. So that's why you see this sharp drop, because what then happened is people quickly exited their Bitcoin to accumulate some altcoins. For people who have been asking me whether it's a good time to buy the dip, I think we should wait for what this weekend comes out with. If this weekend turns out bloody, best opportunity to buy the dip, probably the lowest for the year. Don't quote me, but that's the impression I get. If we have a weekend like we had last week, weekend, then yeah, it's a perfect opportunity to buy the dip. I'm just putting that out there for people who have been asking. I think that will be it for the technical analysis. I want to talk about exchange tokens, and the reason I want to talk about exchange tokens is that exchange tokens are one of the highest utility tokens in the crypto ecosystem after Bitcoin and Ethereum. Period. If I don't see anything after that, I think that pretty much explains it. And at different points during the last 2 years, I've talked about different exchange tokens. I've talked about Binance, I've talked about CRO, I've talked about FTX, I've talked about KuCoin. I think I talked about a long time ago, I talked about KuCoin. And the reason I talk about them is because they are utility tokens that derive their glory, quote and unquote, from the usage. And because they do have a platform, it increases the feedback. It's almost like a positive feedback loop. The more people use the platform, the more they demand the token. The more they demand the token, the more the token that creates value. So even when the whole crypto market cap is down and it's not making sense, these guys are still generating real life value. The reason Ethereum is so powerful is because it provided a platform for people to do so many things that we didn't even think was possible to be done on the blockchain. So that drives a lot of utility. So in the same way, exchange tokens have become like that. Why am I talking about them today? Because many people ask, okay, so Dr. Demi, you say, we should start looking to buy and all that. If you don't want to buy anything, buy exchange tokens. I do have an opportunity now. I'm going to share on the what's it called? I'm going to share on WhatsApp. I think I need a separate Zoom call to talk about it. I'll create a Zoom call to talk about that. There are exchange tokens that you should look out for in this period because you will always get them for cheap. Think about a $150 BNB. That is that is an automatic 4x. Sorry, that's an automatic 4x from all-time high if you buy it at 150. Or CRO. CRO is currently, how much is CRO now? Currently like 10 cents or so, or 12 cents. CRO was almost $1 at the peak. So understand that these exchange tokens are constant utility tokens. So their value does not diminish like other tokens that, maybe have a specific usage for maybe gaming or your metaverse or Web3. Those ones are, they are fad tokens. Let me use that word. If the fad is not hot, then those or the market is down, then those tokens do not have anything. But exchange tokens, I was talking to you about Binance sitting on 5,200 proposals from other companies to buy them. Why? Because Binance has the liquidity. They are making money any day, anytime. Whether the market is going up or it's going down, people are paying commission. Like somebody said, last Friday or last Saturday, that it looks like Binance was buying the dip, and the Binance CEO CZ responded and say, well, we usually don't buy the dip. Usually we buy with commission when people buy. So what he's saying is that their accumulation of Bitcoin, that what they are getting from the commission is enough for them to accumulate Bitcoin. That's exactly what he was saying. So I think exchange tokens you should have exchange tokens regardless. If the price drops this weekend, perfect opportunity. It might be the lowest point of the year. If the price dropped this weekend, like we saw last weekend. So it's important to keep in mind that exchange tokens like Binance, FTX, CRO, KuCoin, I think those are the top 4. There's OKX, which is also a big Chinese and Asian exchange. There is also, what's this other one's name? There's OKX, there's Gate.io, but the top 4 are Binance, CRO, FTX, and KuCoin. Those are the biggest exchange tokens. Those are tokens that will not lose value. So once Bitcoin bottoms out, those are absolutely reliable tokens. I'm going to create a poll. Yeah, I said I was going to do that. I'm going to create a poll just now. And the reason I want to do the poll is to know resumption. So for people that didn't join, that didn't know, what's it called? For people that didn't know or were not here before, I said this is going to be the last, what's it called? Sorry, my brain cannot function like a woman's brain, trying to do two things at the same time. This is going to be the last CryptoPulse Weekly before the summer break. Out throughout the month of July. And I'm going to consider when to come back. So I'm going to send a poll on the Zoom meeting now. If for the guys on Instagram that are on Instagram Live, there are just two options. September 1st and August the 14th. So if you have any opinion on when we should resume the sessions, please type it in on Instagram on the what's it called? Why is it showing like this? Okay. Anyways, so I'm gonna put in, I don't know why. Yeah, I don't know why this thing is showing like this. So I put out the poll. There are two options, 14th and 21st. The 14th is for September and the 21st is for August. Please respond to the poll if you're on the call. I just need to have an idea of what people prefer and when we need to resume. I'm happy not to come back. Okay. Yeah, so I said the 21st is August and the 14th is September. Sorry, I tried to change the content of the poll, but it keeps sending me to the website, and it's not. I don't know what's just misbehaving. Anyways, okay. So 21st is, so the first option is for September. The second option is for August. So based on what I see now, 21st, which is August, no, 14th actually, which is September, has higher response rate. So it's 57% for 3%. Please answer the poll so that I can make a democratic decision, quote unquote. So that's it for now. We will see again on the live session when CryptoPulse Weekly resumes after the summer. I'll put out information on the additional session I had about bear market opportunities. I'll put out information on that Zoom call. I'm not sure, maybe next weekend is a bit busy, but I'll put out an information on when that call will be. And if you are not on CryptoPulse Weekly WhatsApp group, please reach out to me so that if you're interested in that particular call, I can send you the invite or can give you where to get the invites. Thank you very much, everyone. It's been a pleasure being with you. Hold on to your bags, the ones that you still have. I know many people have cashed out to USDC and Binance USD. And I mean, be ready to buy the dip. I think we'll get one more opportunity. Have a lovely weekend, everyone, and thank you.
You did not let us campaign for either 14 or 21. You should have let